Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Good morning. We start with this sad story where gunmen have attacked the Government Science College, Kangara in Niger State, where they abducted several students and teachers of the school. The gunmen are said to have gained access to the school around 2 a.m. dressed in military uniform. One of the teachers of the school who escaped from the attack confirmed to Channels television that the operation started from the staff quarters where they abducted members of the staff, including a couple, before they gained access to the students' hostels. He says one of the students was shot dead in the attack, while the number of students kidnapped cannot be ascertained for now. Officials of the school say there are over 1,000 students in the school, and other sources say that some students escaped after the raid, while a head count is being conducted at the school to ascertain the actual number of missing students. Channels television also gathered that security agencies have been able to detect the terrain of the area where the gunmen fled to and have started tracing their movement with aircrafts seen hovering in the air to track the location of the students. The state police authorities are yet to issue any official statement on the attack, while efforts to reach the police spokesperson has proved abortive. Our correspondent, Emperor Simon, has been following this story and will join us for updates as soon as we have more information.
You know, Ladi, this is very sad. We've been talking about this issue of insecurity. And, you know, when you talk about this abduction of these school children, first it was Chibok, and then we had the Dapchi, then the Kankara down is Niger State. And this is an economy that is talking about recovery. Exactly. How can you recover without a safe environment that would, you know, attract investment, that would give confidence to whoever that wants to do any business here? Even parents now will be afraid to send their children to school. Exactly. I mean, it's really sad. Anyway, let's look at what's happening in the global oil market space as bullish prices marked time today as support from supply disruptions in the U.S. South caused by an Arctic blast was offset by expectations that OPEC Plus producers may ease their output curbs after April. U.S. West Texas Intermediate crude futures dipped 3 cents to $60.02 a barrel, retreating from a 13-month high of $60.95 hit on Tuesday. Brent crude futures gained 11 cents to $63.46 a barrel, adding to 3 days of gains. Oil prices have run up strongly in recent months, and supply disruptions caused by a historic winter storm in Texas, the country's largest oil-producing state, continue to keep prices supported. Both oil futures dipped in early morning trade due to pressure from a stronger U.S. dollar and a potential output increase from the Organization of the Petroleum Exporting Countries and Allies, known as OPEC+. OPEC Plus oil producers are likely to ease curbs on supply after April, given a recovery in prices. OPEC Plus said although any increase in output will be modest, as producers are wary of fresh setbacks in the battle against the pandemic. Saudi Arabia's voluntary cut of 1 million barrels per day ends next month, while Riyadh hasn't shared its plans beyond March with its OPEC Plus partners. Expectations in the group are growing that Saudi Arabia will bring back the supply from April, perhaps gradually. The OPEC Plus group will meet to set policy on March 4.
And back here, Lagos State 2021 Economic Summit has kick-started with the president pledging his support for massive investments in the state to boost its economic potential. The event, which opened yesterday, had other speakers, including the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala. The consensus is that the state government has the duty to provide a conducive environment for business inclusion and economic growth. Do take a listen.
It's the 8th edition of the Equities Lagos Economic Summit. The COVID-19 pandemic has reduced the number of participants, but notwithstanding, some dignitaries are here to take part in the discussion. The co-chairman of the summit takes the stage, expressing optimism that whatever challenge the state is confronted with will be overcome.
The end result so far has been 7 well-received Equities summits, 206 resolutions, of which 193 have been successfully implemented.
Please give him a round of applause.
For the state governor, Babajide Sanwo-Olu, Lagos is fast changing.
The smart city that is unfolding will also be home to a network of intelligent cameras that will support not only security and policing across the state, but will also ensure that our traffic management and data collection for urban planning is next to none.
Approved in 20...
President Muhammadu Buhari, who joined virtually, commends the Lagos state government in tackling the COVID-19 pandemic and promises more support for Lagos in its developmental quest.
The challenges of Lagos must therefore be very clearly seen as part of the challenges of Nigeria. And the federal government will support Lagos to overcome the challenges and to thrive socially and economically.
Other guest speakers call for a new Nigeria that will be people-oriented in order to have a secure nation.
If you focus on really delivering the basic services to the citizen of Lagos to enable young people to thrive, to build businesses, how can we improve the life of our citizens in Lagos?
It's time to create youth-based wealth in Lagos. The past must yield to the present, the old to the new. The dominant phrase should not be, well, the young shall grow. It must be, the young have arrived. Not only must there be a generational shift, there must be a wealth shift by unlocking the potential of the youth.
The newly appointed Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, also joins virtually, saying job creation should be the focus of the government to reduce criminality.
When you have 60% or more of your population that is 30 years old and younger, then you have to worry about job creation. So for me, a successful Africa is an Africa that is able to create jobs for its citizens. And when I say jobs, I mean what I would call decent work.
Making Lagos a 21st century is a collective exercise, and the Lagos state government is calling on all concerned to help achieve the big dream of a new Lagos. Titilayo Haberewu, Channels Television News.
While the continuous rise in inflation rate is seen as a threat to the envisaged economic recovery in the first quarter of this year, the Consumer Price Index released yesterday by the National Bureau of Statistics shows January inflation rate rose to about 16.47%, with food inflation crossing 20% mark. So what do these numbers mean for investments in the Nigerian market? We're being joined by Jolomi Odogoro, Head of Research and Strategy at Commodities Securities. Good morning, Jolomi. Thank you very much for joining us. And pardon me if I did mispronounce your surname there. Good morning.
That's fine. Thank you for having me.
All right. So, how did you read those inflation numbers released yesterday?
I mean, the inflation numbers are pretty much in line with expectations. We had quite a few challenges coming into the year, and obviously the low base effect from the previous year meant that we were going to have spiraling inflation. So, I mean, those numbers were pretty much in line. To speak more to that, I mean, you have issues around security challenges in the food-producing regions, supply chain disruptions occasioned by the pandemic, weak harvest in 2020, as well as the devaluation of the currency. So all of these factors were always going to mean that we would have rising inflation or a high inflationary environment in 2021.
Okay, what is your outlook for the first half of 2021?
So, like I said, you have issues around a low base effect, structural constraints, as well as some pre-existing supply chain challenges. So for us, we expect inflation to continue on this uptrend through the first half of the year, peaking in June before retracing a bit. Our expectation for average inflation for 2021 is about 17.6%, while by the end of the year, we expect this to settle around 15.34%.
So what are the implications of these latest inflation numbers on the direction of yields in the fixed income market?
Ordinarily, given that the views on inflation were pretty much shared across the industry, what we should have seen is not much of an effect because it would have been priced into the market. But what we saw from the end of last year and even through this, so far this year, even with rising yields, is that we still have a very, very negative real return picture for investments. So what we are seeing now, what has been happening or has been prevalent over the first few months of the year, is a rising inflation and rising interest rates and environment. So we expect investors to continually demand higher yields in the market, especially taking into account the increasing negative return.
Okay, and the DMO is set to offer instruments worth 150 billion naira this week. What are your expectations on the auction results?
So, at least in the first auction of the year, what we saw was the DMO coming to the market and issuing instruments around where the secondary market was trading at the time, just under 9% on the longer dated instruments. Right now, on those same instruments, we are seeing yields of around 10 to 11%. And taking antecedents from that and given the significant amount of borrowings expected over the first quarter of the year, is expected that the yields or the stock rates at this auction will definitely be higher and will be around the market level. So we're expecting stock rates above 10% relative to below 9% on the 2045 specifically at the last auction in January.
Now, with this sustained upward pressures in inflation, do you see the CBN perhaps reversing to a hawkish stance at its next meeting in March?
I mean, if we look at the statements from the MPC at the last meeting, the forward guidance there was that an accommodative monetary policy stance will be maintained to support economic growth. And for us, we expect economic growth to return to positive in Q2 2021. And we don't expect a reverse in the stance until that happens. So for us, we expect to switch to a tight monetary policy stance around the end of the second half, also around the end of the first half of 2021.
What is your outlook for the equities market? Given the increase in yields in the fixed income market, do you expect the sell-off we experienced over the past 2 weeks to persist?
I mean, coming into this year, given where fixed income yields were, it was always expected. I mean, when they were quite a bit lower, it was expected that the market would do quite well. Positive inflation-adjusted returns. And as we've seen the yields rise, obviously we've seen a migration away from that market to fixed income, to the fixed income market. For us, in the equities market until after the dividend season, which will be the between March and April. And so we don't expect the sell-offs to persist at the tilts that we've seen over the past few weeks, but rather strengthen post-dividend season as might be expected, given that investors will want to take advantage of risk-free, high risk-free yields in the fixed income market. So for us, this just means that our equities view at the start of the year, where we had a big case expectation of a return on the market of about 12.8%, may not be achievable as investors have started to move markets sooner than expected.
So you were saying that the bearish trend we are seeing in the equities market perhaps may continue for a long time.
No, it's likely to persist after the dividend season, because even right now, looking at some of the dividend yields on some stocks that have a history of paying good dividends over time. We're still seeing dividend yields of around 7 to 10%. Now, analyzing that yield over the year means that a lot of investors will likely stay in the market to enjoy that, but thereafter a switch to the risk-free yield is expected. So overall, we still expect the market will return positive, but not as strong as we had initially forecasted. Our initial forecast was about 12.8%. We expect that performance will be weaker, albeit still positive for 2021.
Now, in recent times, we have seen consistent depreciation in the value of the naira in the investors and exporters window, even as the CBN has offered higher yields in the OMO market. Are these measures sufficient to attract foreign portfolios back into the country?
So for us, I mean, having also had conversations with a lot of foreign investors, these are the first signs of what they would want to come back into the market. But overall, it's not enough, because over the last 5 years, we've had 2 separate occasions on which foreign investors have been locked into the Nigerian market due to significant FX liquidity constraints. Now, without policies or without actions that would solve these issues or would significantly alleviate these issues, we don't expect significant inflows of foreign portfolio investors. You add to that the fact that our peer countries in Nigeria have significantly better yields, specifically countries like Ghana currently has about 20% yield on its bonds, as well as Egypt has also attractive yields, as well as a stable FX market. We don't believe that it's enough as of yet. What we do expect, or what we expected from the start of the year, was that as external issues came to the fore, and the CBN would start to look at supporting the currency, we will see higher yields in the OMO market. We've seen the first step, but we expect to see even higher yield in the market for significant portfolio inflows to come into the country.
What is your outlook on the currency in 2021?
So for us, we expected significant pressure on the currency in 2021, and we've seen actions by the CBN to sort of move and converge the rates such that you would be able to attract foreign portfolio. So the issues are still coming around the external sector and the need to attract dollars to support your inputs. So we expect a depreciation of the currency. What we've already seen at the INE window is continuous depreciation of the currency, now above the 390 level and the 379 official rate level. We expect a movement in the INE window to around the 415 naira, which is the real effective exchange rates level from our estimation. And so, I mean, all of this is still centered around, we expect depreciation of the currency to allow around this real fair value, given significant pressures on the currency, and that will be on the currency in 2021, given obviously the balance of the weak balance of payments picture. So for us, we expect the depreciation of the currency, while not an exact devaluation in 2021.
All right, the GDP numbers are expected to be released tomorrow precisely. What are your expectations from the market point of view?
Like I mentioned earlier, we do expect the GDP figures to come in positive eventually in Q2 2021. But for now, the numbers are still likely to be negative in this quarter.
All right. Thank you very much, Jolomi. We do appreciate your time.
Thank you very much for having me.
We take a break, and when we come back, FX Commodities Market Update is next.
And at the AFEX commodities market, a total of 271,000 contracts were executed in the 9th to 15th, valued at 4.76 billion naira. For details, we are being joined by Michael Martins, portfolio manager at AFEX. Hello, Michael.
Hi, Ladi.
Good morning.
Good morning. How are you doing?
Good morning. Great to have you. Give us a rundown of the week's activity at the market.
Thank you, Ladi. So over the course of the week, there was about a 24.20 decline in the total value of transactions executed in the exchange, from around 6.28 billion to around 4.76 billion. However, with the number of contracts, there was about a 33.08 increase in the total number of contracts executed in the exchange. However, with regards to the number of deals, there was another decline to the tune of 7.94%, from around 63 deals to 58 deals. The AFEX Commodities Index, which is the ACI, inched up over the course of the week by around 0.27%, while the AEI, which is the AFEX Export Index, remained unchanged over the course of the week. With regards to volume, we noticed that there was a general decline in the total volume traded on the exchange over the course of the week, with ginger and sesame being the only exceptions. With regards to price, there was a 4.59% decline in the price of maize contract over the course of the week, and this was due in no small part to the central bank's maize aggregation scheme. Soybean over the course of the week posted another consecutive week of positive return to the tune of 11.34%, adding more than 2,571 naira to the contract value over the course of the week. With other commodities like paddy rice, sorghum, and sesame, they all posted positive returns of 4.33%, 2.67%, and 0.60%, respectively. With commodities like ginger and cocoa, they both remained unchanged over the course of the week. And the fair trade exchange traded commodity, which is our proprietary FETC, also remained unchanged over the course of the week. So that's by and large all of what happened in the commodities market over the past 1 week.
All right, Michael. Now, the National Bureau of Statistics just released its inflation data. And is there any correlation between the commodities market and inflation?
There's a fair bit of, if you look at the historical data, it would suggest that there's a fair bit of correlation between both the inflation rates and the commodities market. Particularly at the firm, we tend to monitor these prices on a daily basis. And when we compare the ACI, which is the AFEX Commodities Index, which is like a proxy for the grains market, which comprises of maize, soybean, paddy rice, and sorghum, we noticed that there was a strong correlation between the ACI and particularly the food inflation. So what does this mean, essentially? It means that if you're a retail investor or you're an institutional investor and you're currently invested in the commodities market or are looking to invest in the commodities market, the inflation rate acts as an excellent indicator of what has happened in the commodities market and what is most likely to continue happening in the commodities market.
Okay, so we noticed that there was a significant surge in the price of soybeans over the past 2 weeks. Is there any particular reason for this surge?
So there is actually, and what you're currently seeing in the market is symptomatic of, historical buying patterns of the major off-takers for soybean. So ideally what you'd see in the commodities market is most of these major off-takers would take positions in the month of November, which is when harvest is. But it's almost impossible for them to take positions for their entire inventory needs for the course of the year. So around the month of February, going on March, is when you usually see their reintroduction into the market, causing the recent price surge in the price of soybean in the market.
So what is your forecast for the rest of the week for the commodities market?
So save for maize and all the other export commodities, ginger, cocoa, and maybe even sesame, I expect all other grain commodities to continue that trend upward, which would indicate what usually happens in the commodities market over the course of the entire season, where you have supply reducing because harvest is complete, and then you have demand overshadowing supply. So I expect to see the prices continue to trend upward over the course of the entire month.
Okay, thank you very much, Michael Martins. Well, still on the FX commodities, FX successfully issued a 25 billion naira asset-backed commercial paper. The commercial paper, which was listed in the fourth quarter of 2020, was 20% oversubscribed and was the first ever warehouse receipt-backed commercial paper listed on an exchange in Africa. Let's learn more about this from Oluwafunto Olashemo, Market Development Manager at FX. Thank you very much, Oluwafunto, for joining us.
Thank you very much for having me. Good morning.
I'm so sorry you had hard time getting here, but thank God you were able to make it. Okay, in the fourth quarter of 2020, FX launched Africa's first exchange-floated agriculture asset-backed commercial paper. You call it ABCP, right? What was the thinking behind this product, and why is it necessary at this time?
Okay, thank you very much, and very good question. So let me start by saying that as a licensed commodity exchange operator in Nigeria, our mission is to see how we can unlock low-cost funding, low-risk funding to participants within the agri value chain, and at the same time delivering a very decent return on investment to the financing partners. So if you understand the landscape of agriculture, you would understand that we are rain-fed agriculture, meaning we are one season for most of the crops. So there is usually this rush to aggregate commodity at the beginning of the season. However, there's limited funding available to the agro processors, and ordinarily a lot of these agro processors cannot approach the traditional corporate commercial paper to raise funds. So our thinking was, how can we securitize commodity, right, using the aggregated commodity as collateral, as the underlying asset, to reduce the perceived risk in the agri market and then inflow funds from the capital market operator.
Okay, you've identified a need for increased funding in the agricultural sector. Could you tell us what that gap is right now? So if we look at the annual credit demand for the agri sector on an annual basis is about 2 trillion naira. And if we look at the current funding, whether from the government side or from the private sector, is around 600 billion. So there's a gap of about 1.4 trillion naira. And that is a huge gap. And to be honest, I do not think that that's a gap that only the government can fill the gap. So there's a huge opportunity for capital from the private sector, whether from the banking or the non-banking space. And the way we tend to do this is to see how do we create innovative products, right, that are asset-backed with minimal risk exposure to the investors.
And how can we collectively improve on this reality?
So a number of things are actually needed to improve on this reality. First and foremost, there is this huge liquidity. If you understand the current trend in the traditional investment space, you realize that there is this decline in the return on the traditional investment vis-a-vis the treasury bill and bonds. So there's this huge capital that is within the capital market space that is looking for place to rest, right? So because of that, there's also a huge to create assets that are investable. So one of the ways that we can all make this reality of funding gap much more fulfilling or much more actualizable is to ensure that we create more innovative products that are asset-backed and offer a decent return on investment to the investors. There's also the place of regulation, right? So if you look at developed commodities markets, right, a lot of them do not trade on the physicals. They are heavy on derivatives and the rest of them. And there are regulatory framework within which the derivative market would work. So the government needs to create an enabling environment, right? So as we are, on one hand, as a licensed commodities exchange, are creating innovative products that are investable, the government also needs to create the regulatory framework and policy to ensure that these things, there's a match between the asset side and the liability side, and capital can easily flow from the capital market to the agro processors. So I see that the poultry and grain sector was one of the key sectors covered with the ABCP program. What are the projected outcomes of the financing on the Nigerian poultry market? So again, understanding the poultry market is also very important. If you understand the way poultry farmers work, about 80% of their cost, their production cost, comes from feed mills and raw material. So our ability to provide them with low cost of borrowing actually significantly reduces their cost of production, which then ultimately means that they will become more profitable, right? The amount that we have raised, which is about 50 million US dollars, is actually small compared to what is needed in the market. But as we begin to increase that fundraise, that low cost of funding becomes available to poultry farmers, and the end consumer would actually benefit from it in the long run. There's also market transparency, right? You know, in the physical market, there are price war as to what the cost of these commodities are. As a licensed commodities exchange operator, we're able to provide that transparent market, that platform that provides for price transparency, so agro-processors can procure their commodity at fair value prices and not just be exposed to unnecessary hike in prices of the commodities.
Well, I'm sure you're aware of the recent, restriction of foreign exchange to importers of grains like maize, and we saw the issues that created amongst poultry farmers and, of course, the feed millers. You know, so how would the commodities exchange and perhaps this ABCP, you know, cushion whatever effect their complaint or support these poultry farmers and feed millers that are complaining that, look, you cannot stop us from importing maize?
So if we look at our local production of grain production, right, you would realize that there's still a deficit in the amount produced versus the amount consumed. So that deficit needs to come from somewhere, which is going to be obviously from the import market, right? But the question is, how many of the poultry farmers have the ability or have the capacity to go out there and source for these commodities externally and bring into the country, looking at the exposure to Forex and the rest of them, which is the reason why we are saying, you know what, we can, for the small to medium enterprise poultry farmers, asset-backed commercial paper and other financial instruments can actually unlock the funding that they need to procure their commodity at the early stage of the season so that they are guaranteed supply of commodity and raw material throughout their production season. They can optimize their production capacity, they can lower their production cost, and the end consumer is better off for it at the end of the day. So the import, in my own opinion, should be left for the big players that have international connection to do the export, while the small to medium enterprise should be financed locally by inflow of capital from private sector into the agro-commodity space.
Okay.
Yes.
Yeah.
Go ahead.
Okay, with the rising inflation rate at the moment, what would this mean for the ABCP?
So what that means for the ABCP is there's also going to be a pressure in terms of the return on investment that the financing partners are requesting for. Remember, these are private funds, and everyone that is investing their fund at the minimum would want to benchmark their return against what the current inflation rate is. So it creates that tension between being able to match what the financing partners are asking for as a form of return on investment on this instrument compared to how much the agro-processors are willing to pay as interest on the money being provided for them.
So what effects internal structures support the success of this ABCP?
So one of the, a number of things internally that we've been doing actually supported the success of this ABCP. One of them is our ability to deploy a warehouse, an electronic warehouse receipt system and a collateral management system. Remember, I did mention that the asset-backed commercial paper is using the commodity as the collateral. Somehow, you need to convert that commodity into financial assets, which the agro-processor then add to his portfolio and upon which he can borrow. So our ability to deploy an electronic warehouse receipt system actually ensure the deployment of the success of this asset-backed commercial paper. Also, market data is very critical. As an exchange, we are sitting on market data, and that market data also help both the borrower and the lender ability to mark to market their exposure exposure. So if I have borrowed from a financing partner, for instance, and I'm using collateral as an asset, I need to know what the value of that collateral is per time, so I can know how exposed I am, and then I can know when maybe to make a margin call and to pull out of that transaction, because we also want to give that comfort to the lender. The borrower on the other side can also effectively manage their borrowing costs. So our market data was also very instrumental in the success of the asset-backed commercial paper. There was also a robust trading platform. So technology, for a commodities exchange like us, technology is very critical to the deployment of whatever operations and services we offer to the market. So we have a very robust technology system that provides that platform for the agro processors. So from the point of raising the fund to the point of disbursing the fund to the point of monitoring the fund throughout the tenure of the loan or the funding facility, technology has played a very critical role in the success of that.
All right, thank you very much, Oluwafunta.
Thank you very much for having
for
me.
educating us.
Anytime, it's a pleasure.
All right, thank you very much. Well, we'll take a moment now. All right, it's time to look at the markets now, and Ini is on board. Tell me what's happening there.
Well, the market review, the market ended in the red yesterday. There was almost 2% all-share index drop in the market yesterday. The equities cap was 21.184 trillion naira. And well, the volumes were in the red. We had higher volume, higher value, higher deals, over 5,000. Well, to tell us more about how the market went yesterday, we have Afolabi Benro, is a stockbroker with Stanbic IBTC. Hello, Mr. Benro. Good morning.
Good morning to you too. How are you?
Yeah, so were you surprised that the market ended the way it did yesterday?
No, not really. We've been seeing this bearish trend in the market since last week. They started with profit taking after the market rallied a little bit, and then we continue to see buyers pull back towards the lower end of the market. So as you rightly mentioned, the volumes were up, value was up, but the market was still red. So it shows that the sellers are slightly more aggressive. The buyers are not being as aggressive to pick up stock at the higher end of the market. Rather, they're waiting for the sellers to come down to meet them to participate in the market.
Well, waiting. That's a waiting game. And what's going on? What's the sentiment this morning in the market?
So it's been a quiet start so far. It's kind of similar to what we had seen yesterday. We're expecting that things will probably pick up. Market has been open for about, let's say, just about 40 minutes now, but the volumes are still very low so far. But we expect that the market to start to pick up, but we're still getting the sense that there will still be likely bearish sentiments in the market. We're expecting the next trigger for prices to start rallying again could potentially be where we start seeing full year results being released by listed companies.
All right, thank you so much, Mr. Agbenro, and I'm sure we'll talk to you again later on in the week. Well, look at the other figures now. A lot of red. The banking sector, the consumer goods, the industrial goods, well, very low. I mean, it's flat, and then insurance, lost 1.54%. The oil and gas did really well yesterday, more than 1% it added. And then we go to the unlisted equities. They have a market cap of 531.20 billion naira. They added 1.75%. The volume there too, in 8 deals, they made over 8 million naira yesterday. And then federal government bonds today, we're expecting the DMO to, there's going to be an auction of federal government bonds. Well, we have Choma Odu to tell us more about what she thinks about what happened yesterday, and then the bonds, the auction that will be on today. Hello, Choma. Good morning.
Good morning. Thank you for having me.
Yeah, thank you for coming. So, 9 deals and all that. But the auction coming up today, what are your expectations? How do you think it will affect the market?
Well, the market is going to be quiet. Everybody's going to be waiting on the sidelines in anticipation of the outcome of the bond auction. But what we think will happen at the auction is we're going to see improved rates from the last auction. The current secondary market rate is ranging from 9 to about 11%. We expect that the yields at the upcoming auction would near those rates. The auction is for 150 billion across 3 tenors. On the 2027, on the 2035, and 2045. Because of what we think about yields, we think that basically there'll be improved rates.
All right, Shoma, thank you so much for that information. Well, I think that's the most we can take. The Treasury bill, that we have one that is maturing in July this year. But I know, Chimi, you should be looking out for the bonds today. You might be interested in it.
Yeah, and I tell you, most of the investors you're seeing that are checking out from the equities market are actually eyeing the auction today to see how they can actually, gain from that market. We've seen what is happening in the fixed income market recently, and that basically is what is affecting the equities market, as we're seeing all red there. But how long this will last, we don't know yet.
Wait and see.
The CBN, of course, Monetary Policy Committee will be meeting next month, and then we'll see how that goes to see how consistent this trend would be. We'll take a break now. When we come back, we'll do a crossover to London. Let's look at what's happening in London. Let's talk to Juliana. Good morning, Juliana. Good to see you this morning. Well, the Issa brothers have completed the deal to buy Britain's third largest supermarket chain, Asda. Now, Asda was valued at £6.8 billion, but the brothers and the investment firm TDR Capital paid just £780 million. And the question out there is, how will this deal work?
Yeah, it's an interesting deal, Chimaze, that's raised a few eyebrows, particularly because, of course, they've only put down a cash amount of 10% of what the actual purchasing price is. But this kind of deal isn't unusual, and it will be paid back in a borrowed amount of time. What the Issa brothers are planning to do is sell off several assets of Asda, one of them being their distribution warehouses. These will be sold for roughly £980 million by the end of the year. And what they plan on doing is renting out this capacity to anybody who wants to use those sites. And then also the lucrative 330 petrol sites across the UK, which Asda own, they'll also be sold off in an amount of time for about £750 million. Now, this deal is still subject to an investigation from the Competition and Markets Authority that is expected to be approved by the end of June and July. But I think here in the UK, the top story, well, the main news or nugget from this is that finally Asda is back in the hands of British business people after 21 years of being owned by Walmart, who will, by the way, still be keeping a £500 million stake in the firm, and they will have a senior team sitting on the Asda board.
And millions of British gas customers will be asked to pay almost £100 a year more for their gas and electricity after the regulator lifted its cap on energy bills. How are these customers taking this?
Not much report from this, I've got to say. It's going to be coming into fruition in the next couple of months. And as you said, we discussed this on your show a couple of weeks ago, didn't we, about Ofgem, the energy regulator, deciding to hike up the cap after 2 years. And that's because they cited the global supply and demand had just got a lot more expensive after the pandemic. They also put in a £23 per month increase per year increase, so a lot of these suppliers could claw back some of the money that they lost during the pandemic. British Gas, they are the largest supplier of energy in the UK, and they're the first of the big suppliers to say that they are going to be taking up this offer, and they will start charging customers more for their gas and electricity. This will affect 2.3 million customers, so not all customers, but any customer that isn't on a fixed tariff will start seeing these increases by the end of the year.
Well, Juliana, I know you don't invest in Bitcoin just like I don't, but the way Bitcoin is soaring, it has crossed the 50K mark. Perhaps this might just be the time we looked into this market like Ladi does. Don't you think so?
Well, I suppose, if you've got $50,000 to spare, then perhaps you could go into cryptocurrency. Although I've got to tell you, here in Britain, there are regulators that advise not to invest in cryptocurrency because it is still very, very risky. But if you can afford it, then perhaps this is the best way to invest your money. In fact, a lot of economists this morning are predicting that within the next couple of weeks, Bitcoin, which has been described as the crypto king, could pass the $65,000 mark, which will be absolutely astonishing. I've got to quickly say, Chimeze, we did have some news here this morning about inflation, which is at a jump 0.7%, which is the highest jump we've seen for the past couple of months, which pushed the FTSE down. But I suppose we'll talk about that at lunchtime.
Absolutely. You'll have to give us an update on that when you talk to Ladi later in the day. Okay. And talking about the cryptocurrency market, of course, let's get look at how trading has been. And Ladi is there smiling.
Yeah, Chimmy, yes.
50K, wondering where that is racing to.
Smashed 50K. But this is the time I get nervous because no asset goes up forever.
Remember the risk?
The risk, correction.
Regulators will keep warning you.
Exactly. Exactly. So let's talk to a crypto trader, Tosin Olugbenga. Hello, Tosin.
Hi, good morning.
Good morning. So Bitcoin finally smashed 50K. What's driving the price this time?
Okay, so I think, there are institutional interest. So there's some big companies are already showing interest in diversifying their portfolio into Bitcoin. And that is actually responsible for the increase in the price of BTC. So recently, Elon Musk of Tesla, made an announcement of about $1.5 billion worth of Bitcoin he already acquired.
Of which he's in profit right now, right? From that purchase.
Yes, from that purchase, yes. Then also, Twitter also said they are also considering diversifying their own portfolio to BTC as well. So those are the information that automatically drives off the Bitcoin market. So we should not also forget that from the global view, people are actually moving their money from the fiat regular investments to crypto because of the possibilities they see there. So there is a massive movement of funds from the regular purchase of stocks in the NYSE to Bitcoin and other altcoins. And also, we seem to also focus too much on Bitcoin without looking at other DeFi coins. Those are decentralized finance coins that are actually focusing on decentralizing how financial activities are being done, from borrowing money and loaning out money, providing liquidity on different platforms and the like. So there are a whole lot of work actually going on in that ecosystem, in that DeFi space. Like DeFi is worth like $13 billion now. All right, so it is not just Bitcoin. We have other altcoins
Other
also
assets,
that are actually, yeah.
All right, where do you see the Bitcoin price peaking?
Well, as it is going, obviously, most of what drives the market is news. So if there is any news that comes out and people panic, then the price, drops. But obviously, this price is actually heading to 100,000. As much as different interested institutions are buying into it. So as they are buying into it and news keep coming up around the crypto space, the price continues to go up and it becomes very difficult for new investors to eventually buy at the end of the day. So it is the big people up there who will hold it as an asset value. Then when
all right,
Tosin.
All right, Tosin, thank you so much for joining us. Tosin Olugbenga is a crypto trader and blockchain engineer. Thank you for your time. All right, Jimmy, you heard it there. Market cap of $1.514 trillion. 24-hour volume, $186.33 billion, down 4%. Bitcoin dominance going up 62%, down 1.40, but it's up. And you know what happens when Bitcoin surges? The altcoins suffer. So if you're on the altcoin side at this point, I'm sure you're not smiling at the moment. 24-hour volume, $79.31 billion. Top gainer, Cake Swap, Pancake Swap. That's a decentralized exchange trading at 21% up, $8.19. So, Chimmy, it's either a big correction or price discovery.
Well, just
Either
as your guest said, I guess for the Bitcoin, we have to leave it for the institutional investors. For commoners like you and I, we have to remain on the alt side of things there. And of course, your guest talked about the DSI coin.
Maybe DFI,
that's
DeFi,
also an area investors who want to go into.
Yeah, DeFi has been trending
common investors like you and I. So we'll see how that goes, and we'll continue to monitor the Bitcoin movement there. All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
Thank you for watching. I'm Ladi Williams. Bye for now.